Hello, folks. It is Tuesday, February 20th. It's about 7:30 in the evening on the west coast of the United States. I'm still on my old computer. I had a new air conditioner heating unit installed yesterday, kind of threw my schedule. But anyway, that's neither here nor there. Let me share my screen. We'll get started. What I'm going to talk about in this video is tips and tricks for using Andrew's pitchforks. And in particular, I want to at least touch on each of these points, swing and pivot points, as they relate to technical analysis on charts. This is one of the indicators or tools we can use on a price chart. Pokey bars, which we'll get into, impulsive bars, which I talk about from time to time, and then fork crossbars. And so let's jump into a chart. So this is S&P 500 in the monthly time frame. And when I'm starting with a clean chart, I prefer to start in the higher time frames and work my way down. And so normally what I would do is I'd start with a clean chart and I'd go in here and draw some obvious support resistance zones. You know, clearly that's a significant level. We got something going on right there. And the reason there's something going on there is that we can see there's resistance, a push through up to a high down here, and we've tested this breakout level for support. And that's what catches my attention, or my eye's attention, is that the fact that we broke through a level and then come back and tested it. So that's clearly a level that's significant, and that's probably enough. We're not going to focus on horizontal support and resistance levels. But if we were doing my full-blown approach to charting, that's usually where I start, is with identifying horizontal support and resistance levels. Sometimes, support and resistance can also occur on a slant or on a slanted line. And so in this case, this line catches my attention. Basically that's just a typical or standard trend line. Now, what we can do with this, and this is part of what caught my attention here, if we duplicate that trend line, it looks like possibly we've got some channels going on there, like right in there. And of course, it's not relevant for this action up here, but we can see that that parallel line gave us the top of a channel. And so that channel top may have been useful as price moved. We can see, there was an overthrow back into the channel, another overthrow, but then we tested that level for support, off to the races, and now we come back and test that level for support. And it's this retest that shows the validity of this trend line as the top of that channel. It's not just a coincidence that price came back exactly to that level. What we've done here is identified a valid support and resistance level. It's just that it's on a sloped line instead of a horizontal line. And so anyway, enough about support and resistance. Let's focus first on tools that can help us draw Andrew's pitchforks. And so specifically, that's what we want to focus on in this video. And typically the whatever drawing tool, charting tool you are using, it will have analysis techniques, indicators, drawing tools that you can apply to a chart when you're doing your technical analysis. Now, in this case, I have applied this particular tool is called pivots high-low in TradingView. This is the drawing tool that I use most often, and certainly in the videos. And depending on what drawing tool you're using, you'll probably find that they've called it something different, but typically it will have pivot or swing as part of its name. And what these tools are doing is identifying the significant points where price has changed direction. And this tool in TradingView, what it's doing is it's marking those points with the price at the turn. Now, in other tools, you'll see that, they'll put a big dot there, and that, you might have red dots for the high and blue dots for the low. And of course, all of that can be changed. Now, when we're talking about pivot points or swing points, the way they are measured in these tools is that they look for a certain number of bars to the left of the pivot point and to the right of the pivot point. And of course, you can adjust that up and down depending on the magnitude of turn you are looking for. And so we can see here that they're using 10 bars on either side of the swing point or pivot point to make the determination that a swing or a pivot has occurred. And so we'll stick with that default value. So now, when we know these significant turning points, we're at a point where we can apply an Andrews pitchfork, because the Andrews pitchfork, it's based on 3 drawing points, 3 pivot points, 3 swing points, however you want to, whatever terminology you want to use. To draw a valid Andrews pitchfork, you need 3 swing points. And so here we'll focus on this latest action. We've got 3 points as identified by the tool. Now, after you've drawn forks for a while, and I've drawn a bunch of forks, and so I don't need the training wheels anymore. I look at a chart and it's like, yeah, okay, that that's a fork, that's a fork. But so anyway, let's go ahead and draw a fork on these 3 points. And I like to use a magnet, and that's what I've just turned on here. This is a magnet. And what the magnet does for us is it makes these points sticky, meaning that we'll get the high or low of the bars that we pick without having to work at it. So, without the magnet, I might draw that. And if I wasn't paying attention, notice that the origin, that's what we call the first point of an Andrews pitchfork. It's the origin. The origin of the fork is not at the exact low of this bar. And so if we don't notice that and correct it, we can correct it manually and we can get pretty close. But turning on the magnet just lets us, feel confident that we've clearly put our origin or our swing points of the fork exactly at the highs or lows of the price bars. Let me change this to the standard Andrews pitchfork, which in TradingView you can see they call it original. So this is the original Andrews pitchfork that Dr. Andrews developed. Schiff was his student, as I said in the last video, and then the modified Schiff, that was Dr. Andrews' suggested modification to Schiff's Pitchfork. So, and let me get rid of we've got the extensions in there, and we'll get rid of those. And so now what we're looking at is it's the original Andrews Pitchfork drawn from these three pivot points. And we can see that price isn't really behaving well in this fork. So I would not consider this a valid fork. But before we give up on it, we want to look at the Schiff and modified Schiff versions of this fork. And typically I start with the modified Schiff fork just based on experience. And so, you know, if this fork didn't look valid, the modified Schiff, I would then go look at the Schiff. And it doesn't look too bad, but in this case, I prefer the modified Schiff Pitchfork. And so we can see that, you know, price almost made it up here to the median line before reversing. Didn't quite pull back all the way to the lower median line before shooting up, and now currently is finding resistance at the median line of the fork. And so here's an example of price doing exactly what Dr. Andrews taught, that in a valid fork, price will rise or drop to reach the median line. And of course, we're in the monthly time frame, and so you know, there's a lot of action that's encompassed in any one of these individual price bars. But that's where we're at right now, price pushing into resistance at the median line of this fork. Now, some people might question the validity of this fork. It's like, oh, you know, it didn't test it for support, didn't test it for support. But check this out. So one of the techniques that Dr. Morge taught, and of course I say taught because Dr. Morge passed away a few years back. Rest in peace, Dr. Morge. And so when I refer to Dr. Morge in the past tense, it's it's because he's passed. So one of the techniques that Dr. Morge would teach was the sliding parallel. That's what he called it. And the reason he named it that is because it is a line which is parallel to the median line of the fork, median lines of the fork. And so that's exactly what we have here in this blue line. This line is parallel to the median lines. Hello, let me get it right there. And then we can slide it around. So sliding parallel, that's how it gets its name. And if we locate that sliding parallel beneath the price action, we can see that, well, support, 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 support. So that gives us reassurance that this is a valid pitchfork that we're working with. If you want to get into technical minutia, we could say that this fork is identifying a frequency at which price in this chart is oscillating. And so once we've identified that frequency, all the median lines of this pitchfork and any line which is parallel to the median lines has that same frequency. And so that's what we're seeing here. The fork has identified frequency, and the sliding parallel has the same frequency. So when we put it below the price action, sure enough, it identifies a valid support level. We could also talk about bullish offset. And so sometimes you'll see people when price, you know, often when price gaps, and instead of going back and testing the breakout level, the gap level, it just continues higher or lower from the gap. And so we refer to those conditions as bullish or bearish offsets. That basically there was so much energy in the price action that price was unable to test the breakout level or the gap level. And so we could talk about in this chart right here that price had enough energy that it didn't come all the way down to this lower median line. Instead, we have this bullish offset where price is just, it's doing what it's doing just at a higher level. So, but again, that's not what we want to focus on in this video. So that's tip number one for drawing valid Andrews pitchforks is whatever drawing tool you're using, play with the different swing and pivot tools. And so if we just look here, you know, we can see these are, at least the first two, these are tools provided by TradingView. And then we get into, well, I guess all of these tools are provided by TradingView itself. And then we get into tools that other people have developed and made public. They've shared these tools for other people to use. We can do the same thing with swing. And we see in this case, so there are no TradingView tools that have swing as part of the name, but we got a bunch of tools that have been provided by other people and shared publicly. And so anyway, whatever tool you're using for drawing, just take a look at the different swing and pivot tools and find one that blows your skirt up. You know, well, it doesn't have to blow your skirt up. Find one that helps you when you're drawing Andrews pitchforks. So let's see, what else did we have in here? Pokey bars. So pokey bars, and we got several examples. This is a fine example of a pokey bar. Let's highlight this. So this this big lower wick, that's what I refer to as a pokey bar. And of course, it's a big lower wick in this case. We also have some smaller, you know, this is also a pokey bar. It's just that the poke, if you will, the lower wick is not as big as it is here. You know, this is dramatic. This is a pokey bar. It's just not as dramatic. We got a little bit of a poke up here, but it's tiny. You know, that's a tiny poke if you want to think of it that way. And so pokey bars are another indication of high energy, impulsive energy, elevated sentiment, if you want to talk about it in terms of sentiment. And a lot of the technical analysis tools that we can use are more accurate when we draw them from high energy bars, pokey bars. And so when I use the term pokey bars, I'm referring to impulsive price action, high energy price action, elevated sentiment. You know, if we talk about this bar in terms of sentiment, we can look at it as a battle between buyers and sellers. And so in this case, you know, price opened up here, and over the course of the month, and of course, again, we're in the monthly time frame, sellers pushed price all the way down to here, and then buyers came in at this level and pushed price back up to that level. And that's how we end up with this lower wick. So anyway, we know that there was a lot of energy expended in the making of this price bar. That sellers and buyers were duking it out in the marketplace or we wouldn't have a price bar. We wouldn't have a pokey bar in this case. We could also talk about wide ranging bars. Let's zoom out a little bit. So if we look at this chart, you know, the typical price bar is fairly small. You know, we got a whole bunch of these little bitty bars. There's a few bigger ones in there, but that one stands out as that's a large bar. It's a wide ranging bar. That's the terminology that I use. It's a wide ranging bar. The price action covers a wide range, a very wide range, actually, in this case. And so wide ranging bar, that's another way of measuring elevated energy, impulsive price action. And so that's tip number 2 when you're drawing Andrews pitchforks or using other analysis tools like the Fibonacci retracement, Fibonacci extension. Those tools are most accurate when you apply them to pokey bars, impulsive bars. You know, some people will go in and they'll just, let me turn the magnet on, and they'll, on my other one, they'll apply, for example, a fib retracement, just, you know, they'll go do that. And then they'll say, well, price didn't reach the 38% retracement. The Fibonacci retracement tool is bullshit. Like, well, you know, no. Actually, the Fibonacci retracement tool and the Fibonacci extension tools, they're very powerful tools, but you have to know how to apply them. You can't just randomly throw one on a chart and expect it to have any value. But in this video, we're not going to look at the Fibonacci tools. I'm just emphasizing the point that when you're doing technical analysis, focus your drawing around high energy action. So let's get rid of the fork. Let's get rid of the pivot points. Let's see, what else do we have here? Impulsive bars. So we talked about pokey bars. We've talked about impulsive bars. And just for review, a couple of different ways we can identify impulsive bars. Well, one is that you end up with pokey bars. That's an indication of elevated energy. Wide ranging, so a bar that covers a wide price range. That's another indication of elevated energy. And then impulsive, let's see, another indication of elevated action is when price closes at or very close to the high or the low of the bar. And so this bar right here, this is a pretty good example of an impulsive bar based on where price closed. So we can see that there's a little bitty wick on the top of that candle, but essentially price in this bar closed at the high of the bar. And so that's another indication of elevated energy. So I think that's 3 different ways of identifying impulsive bars. Now the last tip or trick I want to talk about for drawing Andrews pitchforks is crossbars. I'm not sure how else to refer to that. Let's zoom out again. And so when I look at this chart, and of course, you know, this is based on my experience of drawing thousands of, literally thousands. I'm not exaggerating in the least. Thousands of pitchforks. I know, you know, at some point, it dawned on me that whenever I had a valid pitchfork, there was a significant pullback, or certainly in an uptrend. In a downtrend, it'd be, you know, we'd get a significant move to the upside, and then we'd go back into the downtrend. In this case, we're looking at an uptrend. So the significant moves, the corrections that I'm interested in for drawing valid pitchforks, they're corrections to the downside. And what I know is that a pitchfork, there, let me change this to the original or standard pitchfork. A pitchfork is based on three pivot points. We've got the origin. I put the emphasis on the wrong syllable. So the origin is our first point, and then we get a turn point, the first turning point, and then a second turning point. And so I refer to this as the crossbar of the fork. And as I was saying, I've learned that a valid pitchfork is almost certainly going to have its crossbar coincident with one of these significant corrections. And so that was what we were just looking at. It was the first fork we drew. And notice, if you're really paying close attention, you'll notice that I happened to draw this fork from the green pokey bar instead of the red pokey bar, and that's that's up to your choice. And you might look at the bar. We decided to use modified. You might look and see which one of these fits better. In this case, there's really no significant difference between the two bars. You could use either one. In subsequent videos, we'll probably see that again, and I'll talk about it some. But in this case, it doesn't really make much difference which of those pokey bars you use. Let's look at back here. So if we want to draw a fork using this as the crossbar, we'd look for an origin at a pokey bar, and sure enough, there's our pokey bar, and so we can go draw this pitchfork. And again, let me change it back to an original. And so we can see that the price action here was so energetic that it didn't pause at the median line of this fork. It shot right up to the upper median line, found resistance at that level. We got a little bit of a pullback, and then another push up to that upper median line. Price follows the median line for several bars before breaking higher. And of course, this following or moving along a median line, that's one of the 5 behaviors we can expect when we're working with bars. Another indication that this is a valid pitchfork, if we draw the extensions, the first median line extension, we can see that after price got done moving along the upper median line, found support at that level, and then pushed higher, well, sure enough, it runs into resistance at the first median line extension. And so anyway, this is another valid Andrews pitchfork where we've used this as the crossbar of the fork. Same thing with this as the crossbar. Our origin in this case, let me draw the fork, and then we'll talk about the origin a little bit. So if we look at the choices for our origin, so we've got a pokey bar. Let me zoom out a little bit. So we've got several pokey bars that we might choose from in this case. I'm choosing the latest one here because that's where the upward action started in earnest. These 2 pokey bars, you know, this was the low, and so that would be a reasonable, you know, if you drew a fork from that pokey bar, I wouldn't say you were wrong. And this is another case where, you know, you might look at both of those bars as an origin and just decide which one has the most validity. In this case, we can see that price came up exactly to the median line and then pulled back, played with the median line of the fork, you know, so on and so forth. And so anyway, let me get rid of these drawings. And so that's another tip or technique that you can use to help you identify where to draw your Andrews pitchforks is look for these distinctive corrections in an uptrend or counter trend movements. That's probably the most technically correct generic way to refer to these moves. They're counter trend moves that are significant. You know, they're not these little bitty pullbacks. You can draw forks. You probably wouldn't want, you know, you wouldn't want to do that in a monthly time frame. You know, big time frame, we're looking for big corrections. So I've probably babbled enough in this video. We talked about using swing point tools or pivot point tools in your analysis, your charting tool. That's the first. I consider those basically those are the training wheels. You know, when you're first working with forks, don't feel bad about using training wheels. You know, turn that swing point indicator on as you are learning and becoming comfortable working with Andrews pitchforks. They'll definitely help, in my opinion. Pokey bars again help identify the 3 turn points to use for a valid pitchfork. Impulsive bars, same thing, because quite often those pokey bars, well, you know, almost by definition, a pokey bar is almost certainly going to be an impulsive bar as well. And then the fork cross bars, which I'll have to figure out. There's got to be a better way to refer to that. But, you know, basically we're looking for a significant counter trend movement and understanding that counter trend movement is going to coincide with the crossbar of our pitchfork. So everything we've looked at so far in this video has been in hindsight. It's basically the price action has already occurred. Now, let me slide this chart over, get my picture out of the way. Let's pretend that that's all the price action that we've got to work with. Well, we still see, you know, there's pokey bar, there's pokey bars, and we've got a significant counter trend movement. And so we can reasonably draw a pitchfork at this point with the assumption that it will be valid or may be valid. We don't know what price is going to do from this point forward. Now, if I were looking at this situation where we've got this pitchfork, we don't know what price is going to do next. What I would say about this particular fork is that it is too steep. So when price action becomes very steep, it is not sustainable. Price doesn't move. You know, trees don't grow to the sky, and price doesn't move this steeply for long. And so it's very unlikely that price is going to continue moving higher as steeply as it is here. And that suggests to me that if I were trading, if I wanted to trade this chart based on the price bars that are currently visible, I almost certainly want to use a modified shift or shift pitchfork, because notice that this is a modified shift pitchfork. It is not as steep as the original pitchfork, and so it's more likely that price will rise to the median line and interact with the median line. The original here, it's simply too steep. And so anyway, I'm off into minutia. Hopefully I've provided some value here. We'll look at some more techniques and tools we can use when we're working with Andrew's pitchforks, but I'm going to close for now. And I will talk to you soon. Let me stop sharing and end this video. See you, folks.